Guys, welcome to another video. Welcome to Whiteboard Wednesday, and today we're discussing the record house price rise of 10.9%. It's just been published. I think this article is from Nationwide. I put a little article up here, get Nick to input it on the video. But absolutely breaking news, 10.9% was the annual growth in property prices in the UK last year, or over the last 12 months. Now this is a phenomenal number, and we're going to go into a little bit about what this means, what this represents, how this has been predicted, and what it means for the future. Obviously, before we get into the video, if you haven't already given it a like, please give it a like. It helps out with the algorithm, it means more people are going to get this information. And if you haven't already subscribed, please consider subscribing. It massively helps me out. And on top of that, it does mean that for yourself, you'll be entered automatically into the competition for the subscriber giveaway. And remember, we are going to be giving away an investment property on this channel once we get to 100,000 subscribers. And every month until then, we're already giving away the subscriber dividends. So people are getting cash every month anyway. So lots of reasons to subscribe. I can't think of any not to. Anyway, let's get into this number and let's get into what this means for you. And does it signal a crash is coming? Because lots of people are starting to put videos out at the moment. A crash is coming, a looming crash. 10.9% growth is a phenomenal growth. And if you go back to March last year, lots of economists were starting to say that house prices were going to crash. In fact, I think the Bank of England, they predicted a crash of, and I'll look this up. So guys, I couldn't help myself. I looked up some others. So the Bank of England this time last year was predicting a 16% crash in house prices in the UK. Savills were predicting a 10% crash. Knight Frank were predicting a 7% reduction in prices. Pretty much every single major outlet of house price indicators were predicting that there was going to be a reduction in house prices, which is why this time last year, I picked up 3 real good bargain properties. I'll tell you a little bit about those very, very quickly actually. I picked up an absolute bargain in Corby. I paid 116 for a 4-bedroom house that needed to be done up. I paid 275,000 for a house in Didcot, a 4-bedroom house, which is now a 5-bedroom house. That's just revalued at 350k. That's revalued at 190k. 350, and the other one I bought was 126 over in Wellingborough. That's now worth over 200k. So look, I went around at the time and I bought some real cheap bargains. These were all up for significantly more. I think that was up for 130, that was up for 295, and that was up for 150. So I got some good discounts based on the fact that house prices were predicted to be crashing. Now, the reality is, and this is the reality, okay? And I think I'm quoting Jack Bogle here, or John Bogle, depending, the founder of Vanguard. And he said, "I have never met anybody who can consistently time the market. Furthermore, I've never met anybody who's met anybody who can time the market consistently." And I think this comes true, right? Like all the major outlets are saying, actually, there's going to be a reduction in house prices. And then bang, we go and come in with nearly 11% rise year on year. A phenomenal level of growth. And for someone like me with over £3 million worth of houses, that represents about 300k of capital appreciation. A huge number. So what does this mean for the future? I mean, does that mean that house prices are going to continue to grow at this rate? And what are the reasons that we've seen this growth? So I think it's really important that we understand the reasons we've seen the growth first of all, and that will give us an indicator for what's going to happen next. So let me flip over the board and we'll have a look at the reasons behind the growth. So I think 3 of the main reasons that we've seen this bounce in house prices. Number 1 is monetary policy, and I've put in brackets COVID because it's stuff that's been attached to that. So I'm talking like the furlough scheme, I'm talking about the SEIS, which is the self-employed grant scheme, I'm talking about the bounce back loans, the Sybil's loans, all that money that was printed, put into the economy because of COVID, and then has been allowed to accumulate in people's bank accounts. There's been lots of studies that show that at the moment in the UK, there's more money in people's bank accounts, both consumers and businesses, than at any other point ever in history, which is a huge thing, right? It means that there's lots and lots of pent-up demand. The second thing I put on here is interest rates. Now, this is more of a historic thing rather than being COVID-centric. So I know that it is still around monetary policy, but ultimately I wanted to separate it out because this isn't a new thing. This has been supporting house prices for a long period of time. And I can't really see many ways for this to be undone at this point. I think the Bank of England came out recently and said that they see long-term interest rates at about half what the old long-term interest rates were, which I think was about 6%. So they're saying 3% is what we should be looking at as our new long-term interest rate sort of expectations. But even then, in the short term, it's going to be much, much lower for much longer. And I think everybody's saying that because so much stimulation needs to happen to the economy. We're going to have some scarring. There's lots and lots of unraveling to happen after COVID. And that ultimately is going to mean that interest rates are going to need to stay very accommodating for people so that they can go out and spend money and really fire the economy back up. And the third thing that I put on here was government support. Now that's really been multifaceted, okay? We're talking about things like the reduction in stamp duty, the reduction in VAT for hospitality. All of these things have fed back into just having more money sloshing around our economy. And money is only worth as fast as it can travel, okay? Which is why we had to print lots of money, because the money stopped traveling around the economy as quickly as it used to. So if you think about £100, and if I spend that £100 with John, well, John now has £100, and then John spends it with Marty, and Marty now has £100. Now, how much is that £100 worth? Well, it was worth what it was worth to me when I bought something from John. It was also worth what it was worth to John when he bought something from Marty. So this is called velocity of money. And velocity of money is also just as important as the amount of money. So as the economy contracted, as we restricted what was happening with the money and people were told to stay at home, save lives, you know, rightly so, ultimately, during that period, we slowed down the velocity of money, so we had to print money and give it to people so that they could spend it. So that was the reason, really, if you think about it, why all that money needed to be printed. I mean, there was obviously other reasons, like you needed to be able to pay the furlough, you needed to be able to pay to the businesses. But ultimately, it was because the velocity of money had been reduced. So all of these things have kind of come together to create this perfect storm, and all of this money needs to flow somewhere. So how much money are we talking? How much money needs to find a home? Let's find out. I'm gonna Google it quickly. Right guys, I've had a quick look. I can't find the exact number, but it's in the trillions is the point. It's a huge number. So much more money has gone into the economy. It now needs to find a home. Some of it's gonna come out, obviously, over time. There will be inflation, there'll be other things that will be at play. This is an unprecedented moment in history, and the reality is none of us really know how it's gonna play out. The only thing that we can say with any level of certainty is that the government, who represent us as UK citizens, have said that they will do whatever it takes to make sure that we all get out of this crisis in a good way, and I believe that that will be the case. You know, when they needed to print money, they did. It would be naive and silly to think at this point they wouldn't pay the rest of the bill, whatever that bill might be. So I'm very much behind the fact that all of this money needs to find a home, and property is a nice convenient place to dump it, especially if you can keep interest rates nice and low. So I'm a big believer that property has got a very good few years ahead of it. I think that while interest rates stay low, whilst the government is supporting with 20% guarantees on mortgages, we didn't even discuss that, but the government is essentially saying we're going to guarantee 20% of 95% mortgages to give more people access to the housing market. That in itself is also going to increase demand, increase prices. So myself, I think that property's got a really good future ahead of it. I think that these predictions before, they were all wrong, obviously, which shows you the value of predictions, right? Like, generally speaking, it's very hard to predict the future. Otherwise, we would all be doing much better than we do. But the reality is, with property, if you look at the long-term trend, whichever way you look at it, it goes a little bit like this, but the long-term trend is up. And it's on a curve like that because of the compounding effect of time and money. So if we said we're somewhere around here now, even if we were, over the course of 3 years, if we went through a recessionary period, it would still come back out atop. It always has, and in my opinion, it always will, because we're in an inflationary economy. But what are your thoughts? What do you think that these record numbers represent? What do you think's behind it? What do you think the future is? Do you think there's a crash coming? Personally, I can't see it for the next 3, 4, 5 years. I think the money printers will just keep going if they need to. I think prices will be inflated until this problem goes away. But I'm open to all other suggestions, so put it down in the comments. I'll reply to every single one, and I look forward to seeing you guys on Friday when I'm going to be going vlog style or vlog style up to Kettering this week. I think it is, Nick, isn't it? Yep, I got a thumbs up, it's Kettering. So we're gonna be going up to Kettering, having a look around a project that my mortgage broker, Clemmy, has just purchased, and my company Legacy is underway doing the renovations on. So that'll be a really cool video, and I'll be able to talk you through all the figures. But guys, I'll see you again on Friday. Look forward to seeing you then.